What's up, guys? Welcome back to Road to the 2 Comic Club. Justin here, and today is the last video for the June videos, finally, the 28th and 29th. So we're going to cover that, and then we'll get right into the July videos, and I'm going to try to get into a better rhythm here so I can pump these out more. I'm going to focus more on business news just in case you missed anything, because I do feel that these videos can still provide value if you missed anything, and so my hope is you guys are still getting some good value out of them. But with that said, let's just jump into it. So on the 28th, which was a Thursday, the Dow started out okay, and then it came down a little bit, but then everything finished pretty strong at the end of the day, so that was awesome. Amazon had a phenomenal day. They went up $40 a share. Google went up $10 a share. It was just really good all around. Netflix went up $5. So it was awesome, and we didn't do any trades, so let's just go straight into the positions and see how our top performers were. We had Amazon and Tesla. So we made, if you can see on the top, we made around $6,000, but yeah, a little shy of $6,000. So really good day. Amazon was definitely one of our best gainers, and they've still been going up even at the end of August, which is amazing. So yeah, awesome performance by Amazon. On the second page, not much. We had our Boeing call. They did pretty well, went up 15%. But we're still down quite a bit. We're down like 60% on the whole with them. On the third page, not much to report here. Our Twitter calls did go up 10%. We're up over 100% at this point in time on the Twitter calls. Sadly, I held on a little bit too long, and you'll see in future videos the value of that one falls quite a bit. And so let's go to the fourth page. I didn't correct anything here because, the middle pages takes too long to correct. So here's the fifth page. Here's the sixth page. And then the seventh page, third to last page, not many losers here. Are Cypress, I can't remember what that company does. I think they're like a software company. I heard about them a long time ago, and everyone was talking a lot about them, and I was like, all right, maybe I'll throw some money at it. And yeah, so they're not doing very well. We lost 34% on that one. So yeah, that sucks. So second to last page, we did have some losers that were showing as losers, but they actually did gain. So our hemp stock did go up 0.5%, $10, not a lot. And then our JD calls went up 2%. So yeah, not a lot of movement going down here. And then our last page, we did lose quite a bit with our Align call. We did lose $1,000 there, 14% drop. And then our Roku calls with a $47 strike drops 22%. So not good performances with them. And then I think we're just going to go straight into the second day. But in terms of news, it was just the headlines just said like Treasury yields inch higher after the data and jobs growth. So that was pretty good. And I'll post links again, all these in the description below if you want to read them. But these are old news by now for most of you, so you don't have to really read it. It was interesting that Walgreens did have their debut in the Dow Jones Industrial Average, and they did go down. So that kind of sucks. But we'll talk a little bit more about these articles in a minute, so let's just keep going because I don't want to lose this momentum. So on the next day, the 29th, the Dow started up a lot, like a lot. They were up 235 points at one point, but then they finished the day only up 55, and then some of the stocks went down at the end of the day. Tesla went down $7, so it wasn't like a bad day, but it wasn't great. So we did lose around $1,300. So let's just go into our positions to see how we did there. So on our first page, since we did lose money today, so not a lot of gainers. Our take two calls went up 4%, and that was pretty much it for the first page. Second page, our OLED calls, January 2019 expiration, $100 strike, did go up 16%, so that was cool. And then on the third page, our one OLED call that expires in December went up 10%. So a good day for them, for us, but not amazing, but not bad. And then here's fourth, fifth, and sixth page, seventh page, and then the second to last page, we had our Twitter calls did drop 10%. So we went from being up over 100%, now we're only up 80% on those calls. So you can kind of see the volatility holding on to options. The swings can be pretty big, so it kind of shows you right there. And our GE calls did go down 13%, so that wasn't good. And then finally on the last page, there you can see, again, the Twitter calls on top. And then also our Tesla call did go down 7%. And then a couple calls that were showing down actually did go up slightly. So the NVIDIA Nvidia and Alibaba went up a penny. So really not much to talk about there. So, okay, now I want to go into the news. So we're just going to, again, trade war stuff is what's been the theme for the last several months. And so I'm just going to go over some of these articles, quickly touch on them, and then if anything interests you, definitely give them a read in the description. There is a lot of news to follow. It's just crazy. So this one article said the godfather of chart analysis, says ugly stock market now dealing with uglier action. And he did talk about Caterpillar and how their stock did break below their 200-day moving average, which is usually a bearish signal, obviously, when you go down. But the 200-day moving average specifically, when you break below that, it's not really good. And as an August update, I did check the chart, and they're still struggling to get back above that. So I'm not sure. As someone who's holding Caterpillar, I would be a little bit worried, concerned, just because they haven't been able to break back above that 200-day moving average yet. But I don't think I have any more calls with Caterpillar, so I'm not looking to get into that anytime soon. Just because a lot of the trade tariff war stuff could affect them negatively. So that's just what I'm going to throw out there. I'm not a financial advisor, obviously, but just want to show you that chart, just in case you haven't been paying attention. Okay, also, Amazon's foray into China can be traced back to Xiaomi's founder, Li Jun. Now, Xiaomi, if you guys didn't know, they make, they're most known for their smartphones. They're a Chinese manufacturer of smartphones, but they make really good smartphones for the price. And if you subscribe to Marquez Brownlee, MKBHD, on YouTube, he often reviews a lot of their phones, and he talks about how good they are. But interestingly, Amazon actually bought a company that CEO founded called Joyo.com in 2004, and that was kind of like their first attempt to break into the Chinese market, but they haven't really been able to do that well with it. So this article kind of talks about the history of that, which I think is pretty interesting. Xiaomi did go public recently, and their stock jumped a little bit in the beginning, but then it kind of fell down, but it's still up slightly since their IPO. So overall, they're not doing too bad. But okay, let's just keep moving. And then this one was after the bell. For the Dow, a good quarter, but a bad year. Now, this was the last day of the quarter and the first half of the year. The Dow, let's see. Okay, so for the Dow for the quarter, it went up 0.7%, but it's still down 1.8% for the year as of this point in time. The S&P 500 gained 0.1%. Although it fared better long term, rising 2.9% this quarter and 1.7% year to date. And then the Nasdaq Composite, which is mostly with tech stocks, are in there. They went up 6.3% in the quarter and 8.8% since the beginning of 2008. So very proud of them for that. And as you know, if you watch this channel, most of my positions are Nasdaq stocks. So that's good. That's good for us. So, okay, U.S. stocks tick higher, but trade worries stop an early rally. So I'll skip that because it's really not much. Okay, now Wall Street ekes out gain as Nike surges. So on the 28th, on the 29th, this article is posted. Nike did report really strong earnings, and their stock jumped a lot. They had a lot of good domestic sales again, which is good. It said, this one article, Nike surges after beating on earnings and announcing a $15 billion buyback. So, they had a really strong earnings report. It says the results were lifted by new product launches and a return to sales growth in North America after 3 straight quarters of declines. So Nike is starting to, pick up the pace again. So that's pretty good. Good for them. Now, Apple reportedly making progress bringing on a second OLED supplier. Now, this is kind of old news, obviously, but they were working with trying to get LG as a supplier for their OLED displays. And, just as a competitive standpoint, that is good for Apple because they can negotiate better on prices. If you didn't know, one of the main reasons their iPhone X was so expensive last year was because they only had one supplier, Samsung, and they were charging them a big premium for those screens. I believe it was like $129 per screen, like at cost. So that's one of the reasons Apple had to charge so much for their iPhones, is because, it was just really expensive to make. But with LG as a supplier, that should kind of help them drive costs down a little bit. Hopefully it'll work out for the best, and iPhones will come down in price. I do want to point out that OLED was one of my favorite picks of the year. Now we know they fell down tremendously, but I just want to point out since June 27th they fell down to $80.75 a share, They're now up, as at the end of August, $122.40. So they're up over 51% since the low point. So I think that's pretty good and something to kind of be excited about. It looks like they have some pretty good momentum going, and maybe they can keep it up and hopefully get back to $200, next year. I think that would be amazing. So just wanted to point that out. Okay, so now we're going to go to Tesla. This article was Tesla still isn't profitable 8 years after its IPO, but it hasn't been alone. So this is a really interesting article. It talks about a lot of big companies that, have been operating at a loss for several years. It says like Amazon, Yelp, Twitter, Netflix have taken quarters or years to become profitable after their IPO. And I think that's good to note because a lot of people think big companies should automatically be profitable, but a lot of times they're just investing their money, and that's why they're not showing profits on paper, because they're investing a lot of that money. It's not like they're losing money like a lot of people think Tesla's doing. They're not actually losing the money, they're just investing the money. So I think that's a good thing to note. It was an interesting thing I saw on CNBC was they were comparing two stocks since their IPO, since 2010, and they mentioned a stock, Biomed, I believe is how you pronounce it. So when you look at the chart here, it is crazy how much they've been up. They're up 145% since June 1st, 2010. And even with Tesla's amazing gain, theirs just is like amazing, even more amazing. And I looked them up, and they look like they make medical parts mostly for like the heart, kind of artificial heart valves and stuff like that. And I never heard of them until I saw this on the TV, and I thought that was very interesting. So something you might be interested in if you're interested in biotech companies or something. Might be a company you might be interested in investing in. But anyways, let's just keep going because we're finishing up here. This one is Big Tech's Hot New Talent Incubator Community College. It's a Wall Street Journal article, so I think you have to subscribe to read the whole thing, but it just kind of mentions that a lot of companies are turning to community colleges to look for talent because they don't want to rule out community college. Just because it's a community college, it doesn't mean it's a bad school. A lot of good talent can come from there, and it does bring a good point about student loan debt, and this is going to be a different video. I'm not going to go into it now, but apparently we have like $1.48 trillion in student loan debt outstanding right now. And that's just incredible. And a lot of people are predicting that that'll be one of the main reasons we go into another recession. So I'm hoping that's not the case, but I might make a video in the future to kind of talk about that because there are a lot of statistics about that. One of the positive ones is that a lot of that debt is from graduate students, so maybe they have a better chance of getting a job and paying that back. I don't know, but pretty interesting to note. So last one, Silicon Valley could get power from batteries under the PG&E plan. It's not Procter & Gamble, it's something else. I forget the name. I totally blanked, but I'll post it on the screen. But anyways, they're going to be getting a lot of power from electric, and Tesla's going to be supplying batteries for a 182.5 megawatt project for them. And that's good business for Tesla. So yeah, a lot of information there. Again, links are in the description. If you like the video, hit that like button and subscribe if you haven't already. I'm gonna get to editing this video, and I'm gonna start filming July videos because I want to get these done. I'm sick of being late. So thank you guys so much for watching, and we'll see you in the next one.